Let me ask you a question. Have you ever looked at your paycheck and thought, where did half my money go? You work hard, pay your bills, deal with student loans, rent, groceries, and still taxes eat up a huge chunk of your income. But here's the crazy part. While you're struggling to make ends meet, the wealthiest Americans are legally paying way less tax than you think. Today, I'm going to reveal how the richest Americans avoid paying huge taxes legally. And trust me, what you're about to learn will completely change the way you think about money and taxes. Segment 1. The tax system is not equal. First, here's a truth nobody tells you. The US tax system isn't designed to make everyone pay the same. It's designed to allow the wealthy to use smart strategies and loopholes that everyday people don't even know exist. Let's take Jeff Bezos, the founder of Amazon. In 2021, Bezos reportedly paid only about $1 billion in taxes while making tens of billions of dollars in profit. That's because billionaires don't rely on salaries alone. Most of their wealth comes from investments, stocks, and assets, not traditional income. Surprise fact, did you know that the top 400 richest Americans paid an average tax rate of just 8.2% in 2020, compared to a middle-class worker who often pays around 15 to 25% in federal income tax? Segment 2, real-life example, how they do it. So how do they do it? Let me explain with a real-life example. Meet Sarah. She's a millionaire investor. Instead of taking a big salary, she invests in stocks, real estate, and businesses. Why is that smart? Because capital gains are taxed at much lower rates, around 15% compared to regular income tax. Example, Sarah buys shares of a tech company at $10 each and sells them later at $50 each. That profit is taxed at 15%, not 37%. Even better, if she holds the stock for more than a year. Segment 3, the power of tax deductions and write-offs. Here's a little-known fact. The wealthiest Americans don't just rely on lower tax rates. They aggressively use tax deductions and write-offs. Let me give you an example you'll love. Take Richard Branson, the billionaire founder of Virgin Group. Did you know he deducts millions in expenses like private jet costs and luxury business meetings, which are considered business expenses by the IRS? Real-life case. A small business owner buys a car for work purposes and deducts it. Now imagine someone with multiple companies deducting office space, travel, meals, and even home renovations. All this legal tax avoidance reduces taxable income and leaves Uncle Sam with less to collect. Segment 4, the step-up in basis loophole. Here's a tax trick so sneaky it sounds unbelievable. It's called the step-up in basis. Let me break it down. When rich people inherit stocks or property, the value of that asset gets reset to its current market value. So when they sell it later, they only pay tax on gains from that day forward, not from when the original owner bought it decades ago. Example, imagine your grandparent bought a property for $50,000 in 1980, and it's worth $1 million today. If they gift it to you directly, you'd owe capital gains tax on the full $950,000 gain. But with the step-up in basis, you only owe tax on any appreciation after inheritance, not the full gain. Crazy, right? Segment 5, why it matters to you. So you're probably thinking, this all sounds cool for billionaires, but what about me? Here's the key takeaway. Even if you're not a millionaire, learning these strategies matters. Because by understanding capital gains, deductions, and tax-efficient investments, you can legally reduce what you pay too. Real-life advice. Instead of just saving cash under your mattress, invest in long-term stocks, open a high-yield savings account, or contribute to a retirement account like an IRA or 401k. These methods offer tax advantages most middle-class workers don't think about. Conclusion, surprise tip. And here's a surprise tip you'll love. Did you know that donating to charity doesn't just feel good? It also reduces your taxable income? That's right. Every dollar you donate can be deducted from your taxable income, giving you double the benefit, helping others and saving you money. Final thought. The system might seem unfair, but with the right knowledge, you can play smart and legally keep more of your hard-earned money. So what are you waiting for? Start today, invest smart, audit your subscriptions, and understand how tax laws work in your favor.